Mm-hmm.
inning 5 on 26th. You're giving, right?
Yes.
We can also join, or we
Yeah,
can.
yeah, sure. I think that's free to join. You just have to, on the picture, there is a QR code. You will see on the LinkedIn picture, the poster that
Oh,
I have.
okay.
There is a QR code on the bottom, or you can
Okay,
go
sir.
to ICFAI Business School website. I think it should be there. I will try to get a link. I think they didn't give me the link. They just give me the poster. But I will ask. I will try to get the LinkedIn, registration link, so you can register that. And you don't
Done,
have
sir.
to worry because when I deliver the lecture, I would be recording it, and then I will be putting on my website as well.
Fine, fine, sir.
Okay. So today we want to talk about the two things. One is the F&B expenses and also the other operating departments, right? So the other expenses, I mean the F&B expenses, when we say that is also divided into two parts. One is the labor cost, which includes the similar things. For example, the salary and wages, which is of the F&B staff. And here, usually we split the management and non-management. So management will include all your executive chef, your F&B director, F&B managers, and the non-management staff would be the other chefs. So there will be two things that you have to separate out. Usually, if you see the profit and loss statement, you will see the labor cost is divided into management, kitchen, and service, and non-management also by outlet. So the banquet, catering, conference, catering service, kitchen, and venue separately. Certain hotels they separate out the stewarding cost as well as a non-management part is if it's handled separately. Otherwise, it's usually included in the kitchen because nowadays stewards are reporting to the chefs. So uh, you may have to have a clear policy on where the steward is going, and just have to maintain that consistently. Otherwise, you can have a separate department for the steward to add into the non-management or even the management if it's a stewarding manager or something that you have a position in the hotel. The other lines are pretty much similar to what we have in the other operating department, other rooms department. For service charge distribution, the concept remains the same. The payroll cost remains the same. So you can look at the detailed course that we have detailed explanations in the usually course. And also we have already explained these things in the rooms department. So I'm not going to repeat them again unless you have any question on that. Uh, then we have the other expenses. So the other expenses, there are certain expenses which are specific to the rooms department, right? So there is a banquet expense, which is the other than the audiovisual cost, other than the food cost. So there are usually some decoration expenses which are specific to the event, or there are any other expenses that we use in the servicing of the item of the events, for which it's you don't have any other specific accounts or a specific revenue account, right? So that they are recorded here as a banquet expenses. So it's directly linked with the how many events you have in the hotel. So when you are going to analyze the banquet expenses, you have to see them usually as a percentage to the group revenue or as a banquet revenue, or you can even see that as a cover per cover expenses from the coming out of the events, right? So that is the banquet expenses. So it may include the third party expenses, specific decorations, specific props that you are buying for the events, and sometimes it's also a dumping ground for many other expenses, even though they may not relate to the latest function. So you have to make sure that all the expenses that are put into banquet expense relate to the expenses relate to the events that has occurred only in that particular month. When otherwise, when you do the ratio analysis of banquet expenses together with the banquet revenue, it may throw out certain things which may not be relevant. So that's the care that you have to take. Then you have the China where, so China specifically the cost of the rental purchase, table, serviceware, plates, balls, service platters, everything, and it includes the ceramic, glass, metal, and non-disposable plastics that are used in providing the food services. So similar to China, you have glass and you have the flatwares. So there is sorry, the flatwares, yeah, flatwares and glasswares, right? Which are glassware is usually for anything that is consumption for beverages, not the food, the beverages. And flatware is the usually the silverware and the serving spoons, serving cake knife, ladles, or whatever. It can be purchased or it can be rented in providing these services. So these are the three main categories where you have a difference in, you may have a difference in accounting practices of individual hotels. So you may have a scenario where you are buying these chinaware, glassware, and flatware, and in the initial part, you have to capitalize this when you are buying the hotel for the first time, you operate the hotel. After that, subsequent purchases usually are charged to the expenses. But in certain hotels, you may have a accounting policy uh, to say that certain amount or beyond a certain value, you will put them under FFE or you will put them under amortization for a period of certain times, because the life of Chinaware, flatware, and glassware usually is more than 1 year. So the IFRS or the accounting standards will not permit everything to go into the expenses at one time. They may say that you may have to put that under fixed assets and charge a depreciation over a period of 2 year, 3 year, whatever you consider their life to be. But it also depends on the hotel policy. So the hotel has to have a very clear policy how they are going to treat the Chinaware. Where the first purchase is obviously in all the cases will be fixed asset. What about the subsequent replacement? And if there is any limit on the amount to be considered to be in the consideration for amortization or charging of as one-off expense. The other thing that you have to remember here is some hotels are apportioning the service charge as towards the recovery of the breakages, which is usually will be costing in Chinaware, glassware, silk, and flatware as a replacement. So maybe there are, let's say, a function where 100 glasses are broken. Next month, you need to buy 100 glasses. So where the cost of that 100 glasses will be going, whether it will be going to the FFE, whether it will be going to the flatware and P&L, or whether it will be charged to the provision. So how your hotel is doing at the moment? What is the policy in your hotels?
Not looked into this one on my end.
Huh? No?
No, no, I have not looked into this one.
Okay.
This was way beyond my scope.
Okay. Okay. So yeah, maybe as a I mean, for your own learning, you may want to ask or you want to see what is the accounting policy of your hotel. How you can ask the financial controller or finance chief accountant how they are treating it in terms of the as a policy. What about the other hotels?
So initially we have charged to fix asset,
Yeah,
and after that subsequent purchase we have charged to the outlets, or we have kept in inventory and then we charge accordingly.
to the expenses whenever they issue out the items.
Yes, yes.
Okay. Yeah, so that's also consistent. That's also a policy. But are the auditors say not saying that these items which you keep in the inventory is more than the life of the like depreciation? So you're not charging the depreciation basically. So normally the auditors may identify this as a non-matching concept because you are charging these two expenses when you issue them, right? But the expenses, the amortization or the usage of the life of these things are happening every month, which we are not charging them on a monthly basis. So the expenses will happen in the either in 1 month or either in 1 year, but the actual utilization of the items is in multiple years, right? So it means that the expenses are not matched to the revenue or the to the period of usage of these items. So, but anyway, that's a policy. Many hotels follow similar policy. Shangri-La used to use a similar policy some time back. What about the other, Venki?
I've just told you.
Oh, sorry. Then the other hotel, Shubhodip?
So I don't work in a hotel yet. I just had my training
Uh-huh.
2 weeks back
Okay.
here.
Yeah.
This is all new for me, so I'm just trying to grab whatever I can and hear
Mhm.
out from both the other students' experiences.
Okay. Okay. Yeah. So, you may something that you may want to see when you start working in the hotel, whether there is a clear policy on treatment of operating equipment. So these are collectively called operating equipments. In the past, before this usually definition, there was one line item. We call them operating equipment, and we charge them. So, as Venki was saying, there many hotels say that these are part of our inventories, and every quarter or every month we count them, whatever is the shortage or usage consumption, we will charge them to the expenses, right? So otherwise we don't really charge them to the expense. Even the items which are some hotels consider into inventory, even those items which are already in circulation. So even if the item has been issued to the store, they are still part of the inventory, but the only thing is the location will change to from store to circulation, but the expense will not be charged. The expense is charged only when they are actually damaged and they are actually replaced, right? So that's something you have to consider and proper. Uh, in usually there is no clear guidance. They just say the cost of purchases means whatever you purchase as a replacement, you have to charge to the expense. They are not specifying whether it should be amortized or whether it should be part of the inventory or and charged only when it's expenses. So they are not saying anything like that. So it's not very clear from the usually. So it would depend on the hotel policy how they treat it. So if the inventory is a huge inventory as a part of the fixed asset, the external auditors, the statutory auditors, as a part of IFRS compliance, may put doubts on the accounting treatment of charging to expense only when you purchase them. Rather than they will push towards making a small provision every single month for the usage of Chinaware, glassware, silverware, whether it's in terms of amortization or whether it's in terms of a percentage amount based on the life of um, the equipments. And if they break down, then you have to just charge them immediately. So how you want to do it, it depends on the hotel policy and how easy it is and what kind of record you are making. So just have to be clear on that. And the other items are similar, like cleaning supplies, cluster services. They are same as in the rooms department. Pretty much no difference. When you are saying about the cost of cleaning in the restaurants or F&B or in the dishwashing, also dishwashing is charged to dishwashing supplies. So only the general cleaning, the polishing, the furniture, the floors, those type of cleaning services are charged to the cleaning supplies. Or if you are now disinfection, making the COVID-19 sprays, that are also charge of cleaning supplies. uh, Sometimes you may want to classify these expenses into separate cost centers which are split it out between the outlets, so that in case you are asked to give you the profitability of different outlets, you can give them. Because cleaning supplies you can identify as per each cost center. So you may have a Chinese restaurant, a Italian restaurant, a all day dining restaurant. So you may be able to, so the cleaning supplies would be used as a common. So you may either split the cost in terms of per square feet of the area, or you can ask if the stewarding department can give you the specified chemical that they are using at individual outlets. But many hotels, they don't really charge the cleaning supplies and to the outlets. They charge this into the stewarding cost, and only the items which are specifically purchased for that particular outlet. Let's say you are specially tasking for polishing of the floor of any particular restaurant, then the specific cost will go to the specific cost center. But the common things like chemicals, the cleaning supplies, the brooms, or the dusting rugs, everything else will be apportioned out based on the square feet or based on the number of covers in that particular outlet. Then you have the commission expenses, which is usually you are paying to the authorized agent. So it's similar to the rooms. Complimentary services and gifts, as you are giving the happy hour, the gratis, such as in rooms, you are giving as a complimentary basis to the its customer. In the room department, in F&B, is mostly to the happy hour, or anything that you are providing in the complimentary service as a complimentary basis. And you may have certain contract services like music, entertainment, or the silent mystery shopper services, or cleaning of a function room, kitchens, or ducts. So specific things which you have contracted out to third parties would be in the contract services. So here the cost is usually the if their contract includes the labor, means it's a labor intensive thing, then the cost of material will go here in contract services. Cost of labor would go into the labor cost as a contract services. um, if it's a labor intensive, but if it's only the professional services for like mystery shopper, then or any consulting services, then those will not be charged as a labor, but will be charged to the full amount as a contract services. Though the key point is, can you control the allocation of labor? Means, are you going to determine what they are supposed to do, the labor, or the vendor is going to decide what needs to be done? For example, the hood cleaning services. These are You are not deciding what to clean and how to clean and when to clean. There's a third party supplier is doing. So those costs will come automatically to the contract services. But if there is a cleaning of function rooms, or the specific things which you can decide and you can ask the departments to do it, or let's say the table setup services, you may hire outside company for providing the lifts and also the equipments, and they come and do the setup. So those kind of cost will be going splitting between the material if they are using, and to the contract labor, if that is separately out. If not, then you just have to estimate. The corporate office reimbursable is from the corporate office, and you have decorations which are used in the outlets. So the decorations are not include the cost of the banquet, right? This is because the banquet cost will go to the banquet, but the other cost of the public area, the outlet, the other things will be charged into the decoration, the ice blocks, carvings. Then you have dishwashing supplies, dues and subscriptions, which are pretty much simple, and every other department is following the same. Equipment rental, as we discussed earlier, if it's on a regular basis, then you may have to, like for example, ice machines, for example, dishwashing machines. So those are going to be in the non-operating income expense. But if it's a occasional thing for any specific events, then they will be coming to this line item. So you have to see what is the nature of equipment rental. Then you have flatware expenses. In glassware, we have already discussed. Ice is the ice used in the banquet service, storage, and preparation. So it's the ice block. Some hotels have ice machines in house to produce the ice for usage. So in that case, you won't have that line item in as in expense in for you. But in case the hotel does not have a ice cube machine to produce in house, and you are buying ice blocks from outside, then the cost will come here. The kitchen fuel will include your the sternos, propane, the charcoal used, but not the cooking gas. cooking gas goes in the utilities sometimes, because if the sometimes they may not be able to specify how much is used by the kitchen. If they can, then the cost will come here. The kitchen small wares are the pots and pans which you are using, but here you have to see what is the policy of the hotel in terms of capex. The hotels usually have a capex guideline, say up to $100 items, we will be charging off to expenses immediately. Above $100, we will be putting into capex. So in the small ware, you have to follow the capex policy. Uh, Sometimes the capex policy have two layers. One is the unit price. Another is the unit price coupled with the group block purchase. So sometimes if let's say you are buying certain items, to give you an example, in Shangri-La, even in my current hotel, we have a policy that if the unit item of any item is above $100, we will capitalize that. Under $100, we will see if the unit cost, if we are buying, let's say, more than 25 items at of the same things at one time, then we will see if we are spending, let's say, $1,000 in total, then we will capitalize, otherwise we will not capitalize. So we will see per unit cost at $40 if we are buying in bulk. If we are buying single units, then we will see if it's $100. So that's the criteria. So either $100 individually or $1,000 for a bulk item. But if it's lower than that, then we will charge to expenses. So you have to follow the accounting policy of the hotel. So you have to read the capitalization policy to treat the kitchen smallwares. And then you have laundry cleaning, which is we have already discussed in the other times. And you have menu and beverage list. So designing and printing of menu is here, and also the decorative and protective covers are also put into the menu and beverage list. So nowadays you have third-party applications, right? Digital menu. So where are you going to charge the subscription for the menu? If let's say you have a third-party app which is putting up the menu in an interactive way, or a virtual reality way. So where are you going to charge those costs? You will charge here or you will charge to the other department?
Contract.
No, it's
I will.
actually the IT cost. So it's the information technology cost. So we have another department called information technology. In that information technology, we have the F&B systems, room department system. So you will be charging those costs to, if it's only an application, right? Then you will charge into the information technology department, not to the menu and beverage list. So these menu and beverage lists are usually the printed menus. Okay, then you have miscellaneous, which is if you have nothing else, then you music and entertainment. So you have sometimes the background music or live entertainment music. So the cost of both, it will be here. So it will also include the cost of their stay, if you are providing the stay, if you are providing the tax, if you're providing the freight of bringing in the musicians. So sometimes, for example, on the New Year Eve, you are asking the band to come from overseas, especially play the music and then the charge. So usually, in my experience, we used to have a lot of undercharging, because sometimes we don't understand the contract, or we are not able to estimate the actual expenses in the time, and we have to close the books very fast. So we just make some estimate based on what we have, and then at the time, and when the final bill comes, sometimes the cost is much higher or much lower than what we actually estimate. So there's always an adjustment in the coming months. So you have to be very clear to ask for the details of expenses of music and entertainment, especially when you have functions. If you have like banquet functions which are charged to the guest, then the cost of that event will go to the other cost of other revenue, because you will be recording the revenue as a income in somewhere in the other banquet revenue. Um, so the menu entertainment will be mostly the in-house, which you are not specifically charging to the customer. You may be charging to the customer in the ticket price or in the F&B price, but not as a direct like entertainment, right? So that's the difference. Then you have operating supplies, which are used in the F&B operations, It may include the other, if there is a office supplies or any other supplies that F&B department is using, but it should not be putting into the paper, plastic, printing and stationery, or menu, beverage list, or clean supply. So if a specific supply item is there, which is can be charged to cleaning, menu engineering, or any other expense, then you will charge there. Otherwise, you will put into the specific department in this operating supply. Then you have plastic and paper, which is usually your disposable plastic utensils, paper cups, or anything else that you use as on the cover, or even the aluminum bags, cellulose wraps, everything which you use as a consumable in either service or in production, both. So that cost will go here. Then you have printing and stationery, which is the printing and stationery for guests, right? So sometimes you give the notepads, or you have your office supplies, they will go here. Reservations, sometimes you are paying as a booking to a booking system for your table management system. Then the cost will go to this department. Royalty fee for using any brand name on the, or any band name that you are using in the menu dish name, or sometimes you may have to use the other, like association with the other brands, that for that you, so that you can get better customers. But then in that case you have to pay them the royalty fee for using their names. So it's different from franchise fee, because it's not a franchising fees. Franchising fees is different, because in franchising, the franchise provider is also providing you the training, is also providing you the SOPs, is also responsible and auditing you, right? But for the royalty fee, with just only using the brand name, they are not gonna do anything else. They just allow you to use the brand name as you like, and they charge you a specific amount for the usage of the brand. So that's the difference. Then you have training expenses, which is your training expenses, including the meal and plastics and the supplies that you use in training, travel meal, and we have all these other costs we have already discussed in the room department, so we'll not go through them again. Utensils is the last item. So you can see the cost of utensils, stainers, wine openers, which are used in the food preparation, whether we purchase or we rent. So these are kitchen utensils. So these are the F&B expenses. Then you have to understand which of these expenses are, how we are going to analyze them when we are preparing our P&L. Many of these expenses depend on the number of customers that you have in the property, right? So it means that you will have a look at the customers, how many they are, how many covers they are serving, and look at the per cover cost for all these expenses, and compare with your budget or last year to see whether your expenses are really in control or not. But before you come to the conclusion, you have to make sure that some of all these costs are really moving as per the cover. Some of them may be fixed, for example music, entertainment, or they may not relate to the cover, but they may be variable depending on the type of expense, how they are tied to the business volume. So you have to understand that first before making conclusions that the per cover cost should be higher or lower or should remain the same. So that is the total expenses on the F&B. So F&B operating metrics we have already discussed in the yesterday class. So now I would like to discuss the any question on this F&B so far.
No, so all clear.
Okay.
No, sir.
Okay. Okay. Yeah, let me open the, yeah, this one. Okay, correct. So now let me show you the other operating departments. So other operating departments, mostly the revenue and expenses are pretty simple, very not very complicated. So once you look at the videos, you will be able to understand that easily. What I want to discuss specifically is how we are identifying the other operating departments. So usually gives certain guidelines on how we are going to identify the expenses. So these are the guidelines. So you need to have the department should be generating its own revenue, have a direct operating expense, and is operated with a motivation to make the profit and loss. So that's the key guideline that is in the usually to identify other operating department as a department. If certain departments are not meant to be making the profit and loss, for example, telephone department. Previously, some time back, like 5, 10 years back, when we started the hospitality, the telephone department used to make money because people were still using the hotel phone to make calls. They were not using the mobiles. The Skype has just started. Messenger was not that very popular, right? That was, we are talking about 15 years ago. But today, there are instant messaging, there are VoIPs uh, for calling. So there are very few people who might be using the hotel services, hotel phone for calling to their homes, right? They may not be calling that. So in that case, the telephone department is just usually their primary purpose is to serve as an exchange between the outside call and to the guest, or between the hotel guest, or between the hotel and the other departments. And they also serve as operators. So there is no separate department for operator and also the crisis management. So these are the telephone department is not an operating department. So it's not a profit making department. So many hotels would now discarded the telephone department as an other operating department, rather than is gone to as a cost center into the information technology expenses, into the telephone expenses. So that's, and the manning has gone to either rooms or how whoever is managing that department, right? So that's how you have identified the expenses. Then sometimes the hotel has, let's say, apart from a telephone department, may have a business center. Now, business center in many hotels can be big. If it's a really a business, it's a business hotel. Business center may have many type of revenues, right? You may have ca- calling service, you may have secretarial services, you may have printing services, you may have courier services. But many hotels which are like distant hotel, the business center is just as a usual expense. So this is not really making a profit. So but you are providing this to keep your star ratings, to provide the services to the guests when they need it, but not really as a motivation for profit. So you have to see before you identify any department as other operating departments. It should have their own ability to generate the revenue, have their own expenses, and it's running to make a profit or to reduce the losses. So that's the motivation. Then the second thing is the revenues are reported on a gross basis. When you recognize the revenue on a net basis, usually when you don't have a control over the pricing and the performance of the services. So when we say revenue are reported on a gross basis, means that the hotel is in control of the services performed, of the prices to be charged, and also owns the risk of providing the good services or providing the services. So that is again another criteria which is similar to the one which is, but is more detailed and specific to the type of revenue, right? So if the hotel is reporting a gross revenue, that's another criteria. But for me, the primary criteria is whether we are generating the profit or limiting the loss. So that's the another criteria. Then, if the department has no revenue but is providing complimentary guest services, then it's not other operating department. As I explained, the telephone department, their cost will be charged to the department where the most of the benefit is coming. So usually, like telephone department, the cost of labor and everything else will be charged to the rooms department because it's serving the guest rooms, and the cost of telephone and everything else will be charged to the telecommunication expenses under IT expense. So that's how you have to decide. You have to make a judgment of where you how many type of different departments you have. You may have a souvenir shop. Now, the souvenir shop, most of the time, the motivation is to make profit, not to run it as a loss. But there may be some other departments. For example, in resort, we have tour services, or we have the CSR services, or the guest tour services, which are just the purpose is to provide the complimentary resort tours, to provide them the safe space for doing the helping the guests to do the CSR activities, or to find the seashells, or to make the understand them the sea living ecosystem. So those are complementary services to the guest, right? So in that case, again, these costs will be charged to the room department, not as a revenue center. So you have to really understand what is the objective of the department that is asking for a separate P&L. So one way of looking at is to look at what is the percentage of revenue to the total expense. Whether we are making are we making enough revenue to be sustainable as an expense or not? If it's n- continuously very low revenue but very high expense, it means that the department is not intended to make a profit. Is department is there to serve something else. So if the cost will go to that particular area, right? Then the other thing is the third party, right? So if let's say the all the cost related with that department is charged to the third party owner, so this point is similar to what we have discussed in the net revenue, means the hotel does not control the performance of the services and also not take the risk and reward of the department, then the cost then it's not a separate operating department. Well, in that case, the cost and the revenue generated will go to miscellaneous income, and all the expenses will also go to the miscellaneous income. So that's the definition of other operating department. So you have to be clear and select which operating department should have their own P&L based on these criteria. Any question on this criteria?
So for outsource the third party, um, what kind of expense will be there from
Uh,
them to us?
for them to use probably would be only the, I mean, your expense would be only the cost of calling them, or cost of booking them, or labor cost for supervising them. That's the only cost that the hotel will have, right? But the other cost would be usually by the third party company, and you will just making up on top of those expenses to the to charge the guest. In that case, you are already netting off your cost from the revenue, basically. So you are already charging the net amount as a commission income to the guest. So there is no expense, basically. You have already netted off.
Okay, sir. Clear.
Yeah. So what are the other operating department in your hotel? I mean, what type of different P&Ls you are generating?
We had outsource like board services,
Mm-hmm.
and beside that, we had CSR, which never used to generate revenue.
Mm-hmm.
Uh,
So you have separate P&L for them, or you're charging the cost to the room department?
no, we are charging the cost to the room department.
Okay. And what
We don't
about
have
the
separate P&L.
outsource
Outsource,
department?
we are on the revenue sharing basis.
So where the revenue is going, the net revenue is going,
Net revenue
miscellaneous
was like
income.
booked in miscellaneous income.
Okay, okay. Yeah, so that's exactly in compliance with the usually directions. Okay. Um, what about the other hotels?
Have not had exposure to that as yet, but I am
Uh-huh.
curious about it. We'll look into it.
Yeah, yeah. So it's important. It's will be interesting to see what are the operating department that your hotel is running, and are they really the operating departments, or they should be turned into a cost center. For example, like I give you an example of minibar, right? Many hotels now, because of the COVID, they are actually clearing the minibar. So the minibar used to be a separate department in itself, right? where they have 4 5 people. Like in Shangela, we have 5 people to manage the minibar in under the housekeeping, but the department was separate. So these 5 people cost would be charged to minibar, and the revenue we collect from the customer would also go to minibar. The cost of food would go to minibar, and we always look at the profit. But minibar never made a profit because it's the high labor cost. Many people and the people started to not use the minibar as much as we like them to do. So the GM was, because it was a separate P&L, GM was always pushing the department and always pushing the housekeeping, and we are wasting like a half an hour in the P&L meeting. So at some point of time, when we, like after 1 year, 1.5 year, we saw that, yeah, this few departments like minibar, telephone department, they are not making money, and we are wasting our time and efforts and energy to try and make them profitable, but it's never possible. So we decided that, okay, we clear the minibar out and stop the P&L, finish it off. The person who are in charge for minibar refilling as a service. Now minibar would be as a service, not as I mean, like we put it as including in the room. So we say, okay, we will give you as a free certain items in the minibar. So that becomes as a service now. So that becomes a part of complimentary gifts and services, rather than we charge and we have the incur the labor cost. The only thing is we have 1 or 2 people just only go and refill the minibar. That's it, finish. So this is means like you have to constantly look at the other operating departments, whether they are making money, whether they are or their main purpose is to remain as complimentary service, or just only because you want to provide the option. Like for sometime you have departments just for to get the star rating. Many hotels will have minibar, many hotels will have business center, just only to get the star ratings, but not really any other purpose. So you have to see, are they account for enough profitability to to require a separate P&L or not. So that's the majority for other operating department. In many hotels or business hotel or resorts, the majority of the profitable departments would be spa, health club. Now, spa and health club can be separate P&L, or spa and health club can be one P&L, depending on how the hotel is structured, who is managing it. Sometimes spa is managed by a separate person, health club is managed by a separate person. They have their own P&Ls, they have their own expenses. But in many cases, the spa and health club is combined as one service, and the same persons are doing multiple jobs. So in that case, you may want to combine the P&L, but look at the revenue streams separately. So in the videos that you will see, you will have separate line items of the P&L. So you will have the golf course, you will so there is so the usually in the book we have discussed separately the golf course. Many hotels, they don't have golf course, so it's not going to be applicable. But most of the hotels have a health club, have a spa, have a transportation service. Some business hotel have car parking service, which are running profitably. The resorts usually have adventure services. Certain countries has karaoke TV services. So it depends on the hotel, the location, what type of departments you want to create. But in general, the profit will be, the structure of the department would remain the same. So you have revenue which is not segmentized, so there is no segmentation of this revenue. But many hotels now, they split, let's say for example, health club, so they would split the membership revenue separately, spa revenue separately, merchandising separately, and then the cost of sale would also be separate, just to understand how the revenue is segmented. Even though it's not required by usually, the hotels can do it by their own. The expenses are standard for most of the department. Only certain departments like the golf course, they have some additional line items for golf services. Otherwise, the expenses and the revenue are pretty much standard for all the departments. And I have explained you that in the videos, so you will be able to see that what kind of hotel revenue is going into the golf club and to the cost of sales. So the more line items you have, the more cost of sales you have. So that's how you gonna decide how you want to, what is the major source of revenue. So the line items will depend on what are the major source of income for your department, and then the what type of cost of sales you want to maintain as a continuous basis to compare your cost of sales towards the revenue. So that's so you will be, I will be giving you this again, the PDF. I will upload that PDF. Yesterday I forgot to check if I have uploaded the PDF or not, but I will check and upload into the department. So here's Health Club and Spa. I have explained that in the video, more details. You have these type of different type of revenue that is required, that are prescribed by usually. So skin care, hair care, nail care, fitness, handle wellness, membership fee, retail revenue, and other revenue. And then you have cost of sales for each of these line items. The the labor cost and other operating expenses are pretty much the same. So that's basically on the other operating department. Um any questions on other operating department?
No, sir.
Okay.
All good, sir. All fine.
Okay. So what I would suggest is you look at the videos of other operating department, and once you have, if you have any questions, then you can let me know. Okay.
Sure, sir.
Okay.
Sure. Sir. Okay.
So this week we have done the room. We have now, so far we have done the rooms. We have done the F&B, and also we have done the other operating departments. Right now, the next week we our schedule is for the other operating, other undistributed expenses. For that, I have not, for unlike the other operating departments, I don't have pre-recorded videos for those four department that we had to discuss. The administrative and general, the sales and marketing expenses, property maintenance, and the information technology, right? So for those, we will be looking at the from the live into the live. So but before that, if you get your hands to the P&L format of the ANG, that would be good. Otherwise, I will be sending you the PDF via email of the other of on the undistributed expenses, so that you have some time to read, and I don't have to repeat everything which is written. So, and you have some reference. If you want to print it out, you can just print that out and make notes while we are discussing. Okay.
Great, sir. Yes.
Yes, sir.
Yeah.
Okay, sir.
Yeah. Okay. So in that case, then I will see you next week.
Yes, sir. See you Saturday.
Yes.
Okay. Okay. Thank you.
Okay, okay, sir.
Thank you for your time, sir.
Bye bye.
Thank you very much.
Thank you, sir.
इसने तो खाए थे, मुरमुरे तो खाए थे थोड़े बहुत। कोई बात नहीं, सो जाने दो। थक गए हैं, इस सुबह से खेल रहे हैं, इनको लग रहा है कि इन्होंने कुछ नहीं किया है, बहुत थक गए ये। देख ले भैया, उठ के अगर पीता हो तो पिला दे।